Airstrikes are sending shockwaves through Gaza and through the Israeli economy. With the country at war and all reservists summoned to active duty, different sectors of the economy have slowed down.
A number of people have been called up to the army, so demand certainly will have cooled from that front. In terms of the different sectors that are being impacted, of course, you're going to be looking at insurance because of the damage that has been done, but also tourism and transportation. That's certainly something that is going to significantly take a hit as a result of what's happening at the moment and going forward, as people are obviously concerned about visiting the region.
Credit rating agencies have begun revising Israel's creditworthiness. S&P Global have lowered the country's outlook from stable to negative, citing risks of a regional spillover of unrests. They also expect the economy to contract by 5% into the fourth quarter of this year. Other agencies, like Moody's, put Israel's debt rating under review for downgrade, and Fitch Ratings placed Israel's credit score on negative watch. Analysts say that every day the war drags on will hurt the day-to-day economic activities of Israel and risk destabilizing the entire region.
You will see less and less of that FDI, less investment, less relationships that the countries, especially among the Arab world, which will go to and then have those relationships with Israel. I think the normalization, which is already on halt from Saudi Arabia perspective, those conversations will simply go away. Then you come back to that creditworthiness. And then if there is a single unity, a single message from the Arab world, for instance, Saudi Arabia calling for some strong reactions in terms of cutting oil supply, and Qatar on the other side, gas supply, we could see the whole situation going into a completely different level.
The Israeli shekel has been on a downward trend, falling to an 8-year low against the US dollar. The Bank of Israel was forced to step in, selling $30 billion of foreign reserves to prevent further collapse. A Bank of Israel report also reduced its forecast for economic growth this year to 2.3% from 3%. And finding the capital to finance the country's war efforts will put further strain on the national budget.
Now it is about more finance, how to find more finance to finance the current bombardment which is taking place in Palestine.
Israel's pivot to a wartime economy has left a physical dent in the country's workforce, raising uncertainty in its economic outlook. Emre Boz, TRT World.
For more on this, we're joined now by Yusuf Al-Shamari in London. He's the CEO of C Markets. Good to have you back with us, Yusuf. Now, the world's major credit ratings agencies are either downgrading their outlook or putting Israel on watch because of the war they've started with Hamas. How would you describe the Israeli economy before this conflict and how it might be impacted if the war drags on?
Hello, Askar. I'm very delighted to join TRT. As you know, Israel economy is it's pretty much diversified. And I think a big part of it relies actually on tourism. And in addition to, as you know, the Israeli gas exports. If you look at the recent trends, since the start of the war, we've seen a decline in the Israeli currencies by something like 5%, and that is quite a significant fall. Also, as you see, the tourism sector has been pretty much affected, and this has actually been a major part of the Israeli economy. But I think in the meantime, because they export something like 9 billion cubic meter of natural gas, pretty much you can think of it here like when Russia invaded Ukraine, and Russia has been able somehow to support its economy using oil and gas revenues. So I guess here the resources, especially natural gas, will definitely help Israel subsidize the huge losses that is currently incurring from this war. The other issue here is that which Israel also has is access to support from Western powers, something that Russia doesn't have. And I believe here the especially supports from the U.S., whether that's military or financial support, will somehow enable Israel to cope with the be able to subsidize the costs incurring from this war. But one thing here, what I would like just to highlight is that the longer this war last the huge cost that will be not before the financial cost will be the lives that are happening on both sides. And I believe here that also can be would really also lead to a major economic cost for the Israeli economy.
We know global markets, Yusuf, have also reacted to the ongoing hostilities. Let's look at oil, which I know is one of your specialties. Prices have climbed for the past 2 weeks since fighting broke out on October 7. Israel isn't an oil producer, so there's no direct impact on supply in that sense. But there is a very real risk that regional players, some of whom are very big oil producers, might be dragged into the conflict as well, isn't there?
Well, definitely here, because what's happening, Oscar, is the Middle East is quite an important region for oil exports. So any geopolitical risks happening in the region, even if it is not directly involving oil producers, will have a direct impact on crude oil. Just look at many OPEC countries, for example. If you're talking about Iran, for example, OPEC countries including Saudi Arabia, Kuwait, Emirates, also some other countries in the OPEC countries, including Algeria. So when you have these kind of complexity, what definitely the market will try pricing in, and then you have speculators taking a dominant role in the markets, and that can drive prices up. Yet, what we're seeing now is the willingness and the possibility of OPEC Plus intervening in what's happening so far is quite limited. So I don't see a direct interventions or a possibility that OPEC can react as a result of what's happening. But I believe, because pretty much they're trying to manage the physical markets, and what's really happening, there's no shortage of supply, no shortage of even the stocks are continue to be at reasonable level. So I believe this is why I don't see a direct impact currently on OPEC Plus. Yet we're seeing the financial markets being impacted, not as much as what we saw in September, when the market was pretty much concerned about tightening supplies because of extension of voluntary cuts coming from Saudi Arabia and Russia. But I think will be something of worries, especially as we move to end of this year and beginning of this year, especially if this conflict continues to escalate.